So I pulled over 20R out of gold in November without even having a win rate over 50%. And here's how it actually works. I did it by using one repeatable setup, keeping my losses capped and letting winners stretch. Even though my win rate was just below 50%, my average risk reward was 1/4. So let's hop into it. Section 1, the numbers, and why this month was different. This was my best month ever, and I only traded gold, right? An asset that I usually don't trade. Normally I trade Euro USD. But I started off trading gold and I knew it felt different because I could immediately feel this is what I like, right? I used to trade gold way back in the day, and then I was trading around break even with gold all of the time. But now after probably 7 years coming back to gold, or at least trading gold more than once a quarter, it felt very, very nice. And this was not because I suddenly became a perfect trader. It was actually because I stopped trying to be one. Now, here are the numbers that I did. I did a 49% win rate, 1/4 average risk to reward, and over 20R return. I did this on Top Step, and with risking 500 a trade, this was around a 10k return. And I wanted to make this video to show you that you don't need a high win rate, even though I would say 50%, 49% is very, very good. But if you're able to let your winners run, and if that is an average of 1/4, you can have 4 losses in a row, and that one winner would pay everything back. And if you can then stay consistent and have enough restraint to avoid the dumb trades, then you're doing months like these. Now, section 2, the strategy. It was simple, it was repeatable, and there was basically no noise at all. I only used one setup this entire month. One pattern, one rhythm, and it was just a continuation setup. It couldn't be easier than this. High time frame direction, liquidity sweep, 5-minute confirmation. We're looking for the continuation then at our entry. And that's it. So what that looks like on the charts is that you have your higher time frame trend. This was bullish in this example right here. You have your liquidity grab. We grabbed these lows that we had right here. This was right at the beginning of Asia. We turned around with a lot of momentum. And then we had a gap right here. Like I said, I'm trading on Top Step, so I'm trading on futures, where it was a bit different than it is looking right here. But still, it is pretty much the same. We enter and we target the continuation. In this case, I believe on this trade, I targeted these highs right here, right? To trade right above here. As you can see already, foreshadowing a little bit about this video, that we have a lot of big winners right here. Again, I was trading on futures, so some of these are not even on here. So I'm looking for gold to be very strong in one direction, to take out liquidity and then basically turn around and show me that it is strong again by making a market structure shift, by building up momentum and showing me those value gaps stack upon each other so that I know, okay, this is a clean continuation and I will get in right here. And the beauty of everything is that I don't need to be right. I just need to be right half the time, and in theory even 1/4 of the time, because my average risk reward is so high. So if I lose this trade, because let's be honest, I don't have a lot of confluences, I just look for the high time frame direction, I look for the volume to be on my side, and then I look for a small confirmation that we are now starting to continue the trend again by looking at fair value gaps. That's basically everything that I look for. But because my trades are so large, I can be wrong a bit more often as well. And even with having that luxury, I still didn't need it this month. So I didn't use indicators, I did not guess, I did not hop systems, just one system, one rhythm, same structure, same entry confirmation, and the same risk management every single time. Now the trades themselves, they were simple. Some are clean, like a 4R, an 8R, I even had a 9R, I believe, and some stopped me out instantly. It is very important to remember that I did not act out of emotions. When I was stopped out instantly and I still believed in the setup, I would get in once again if I saw that volume was picking up again. And that is again, like I said, I have this room to be wrong a little bit more than usual. And sometimes I would even get stopped out right away again, and that's totally fine. But then I know, okay, don't act once more on this, because maybe you believe more in this setup than you actually should. I want to go through some of these trades that I've taken. So today I've taken a position, and this was unfortunately a loss. I was anticipating a continuation to the upside, but as you can see, we turned around. Now, what did I do? I did move my stop loss up higher, as I was like, okay, if price retests this OB and it does not respect it, we probably turn around completely and I lose my position. We have also taken out London highs, so that is the reason, a very big reason that we are turning around right here. But I also take trades like this, right? This was last Friday, And price took out these lows right here. Nothing really significant, but it was more like an OB retest right here. Price started moving up higher in the meanwhile, and then I just entered. I entered right here, stops underneath this one. Like I said, I take my trades on futures on top step, so these are more like recreations, so it does look a little bit different on top step. But price moved here, stops underneath here, and I targeted a continuation. I targeted, if you're curious, I targeted this high right here. Right, the continuation like this. This is basically what I kept on doing the whole entire month. This I did not take because we did not get tapped in. This was a very nice 1/3 position where we created a Faveti gap. Price came in here. I saw that price was moving away from it / respecting it. I entered, stops below, and I targeted 1/3. Then we had this one. This was a short for once. I saw that price was respecting this high, creating a lower high, respecting the OB, and turning away from there while creating Faveti gaps. I did not enter right away on the Faveti gap because this third candle is bullish. I don't really like it when it is against the trend, that third candle. So I was waiting for price to come into the Faveti gap and see what that candle was going to do. Is it going to respect it or is it going to disrespect it? It respected it, right? It respected it, and on the next candle, open right here, I entered my position, stops above this one, and I targeted the continuation here. Then this was a very nice trade, but a very unfortunate outcome is that I entered right here. This was a London session trade, a very rare London session trade. And why I don't take London session trades on gold is that they go in the wrong direction than I want to trade from, because I want to trade with the trend, right? London often creates that counter trend trades. Now, I did enter right here as price came into the Faveti gap. It retested its previous high, traded away from there. So I was like, okay, nice entry. Stops underneath the low that we had right here, and we started trading away from there right away, like very, very aggressively. Now, what did I do? I did not want to lose this position, obviously, so I moved my stop loss. I moved it up higher, and I moved it underneath these lows right here, underneath the candle body low. What did the price do? Tapped in right here and moved away from there very aggressively. Into this, I target a 4-hour or a daily Faveti gap up here, and then we moved to the downside. This was an unfortunate outcome, but still it was a 1/3 position, which was pretty good. This was a loss. Like I said, it's a 50% win rate, so I'm still losing half my positions. Then this one was a very interesting one, as price took out liquidity right here, and then we started moving away from there. Now you have to see what price or a market structure is doing. Just creating a high, higher low, higher high, higher low, and then all of a sudden we fail to break that high. So then I'm interested and I'm looking for, okay, what is price gonna do now? Are we going to turn around completely, or are we going to break this one? And a thing that happens right here is that we created a Faveti gap while we were at it, right? This Faveti gap right here. Now, what I'm then going to do is that I'm going to pay close attention to what price is doing when we come into that Faveti gap. And as you can see right here, we respected it, right? We traded away from there. And that is also the reason why I did not enter right away on the fair value gap, as I wanted to see what it was going to do. That is something important that you have to know and have to apply to your trading as well, is that your entry should be variable, right? Not every time you should enter on the fair value gap because your rules say you need to. Your rules need to say that when you're uncertain, you need to wait for a double break or for more certainty. Exactly what I did right here. I waited for price to respect this one, and then I wanted to see it break. I think it was on the 1 minute something right here. And my stops underneath this low, because this one was the one that tapped into the Faveti gap. As you can see, I got very lucky for some reason right here, because it still took out this low and then it moved away. This was a crazy, crazy trade, because it was a very, very quick TP as well. Then we had some right here. And like I said, I was trading on top step, so not all of the trades are on here. Most of my losses are not on here, but this was the first trade of the month. This was a very interesting one as well. We were in a downtrend. Price took out these highs, body candle highs. Traded away with the most clean Faveti gap sequence that we have seen up till now. I entered from the top Faveti gap, or I waited for price to tap into there. Then I entered on this candle right here. Stopped above here. And I targeted a continuation to the downside. Very, very clean move. This was, by the way, my top step. You can see my trades, the ones that I've taken, the losses that I've taken, the wins, the returns, etc. You can see everything. I want to be as transparent as possible. And as you can see, I did perform very well. Now, a thing that I want you to take away from this video is that this is not an average month for me, not even close, right? But there is definitely a thing that I learned. And the thing that I learned is that your edge isn't the pattern or the indicator or the entry model. It is basically your relationship with risk and how you can handle that. Because this month I stopped chasing the perfect trades. I was just looking for positions to be honest with you, to meet my minimum required days on Top Step. Because on Top Step, you need 5 days minimum that need to be profitable before you can take a payout. So I was just doing that. And sometimes I saw a position that was really worth my time, was really worth my effort, and I just let it run. Right? I just let it run, and sometimes I even moved my take profit to double of what it was before because I saw so much potential in it. And that is the thing. A 1/2 system, a 1/3 system is fine. It is very good actually. But once you're past that stage, you should really think about, okay, how can I make my winners run more or let them run more and cut my losers short? For example, today, that is what I did, right? I cut my losers short. And that is how I keep my money in. And that is how I bring a lot of money in through having very big winning positions. Because that is when your numbers start compounding. The 20R wasn't luck. It was a mix of discipline, selectivity as well, and really letting my system breathe. And it showed like gold was the perfect partner to do that with. Now, if you want to learn more about this trading month, if you want to have, for example, a full breakdown of every single trade, just let me know in the comments and I will put it in a pinned comment or something or in the description. So maybe if this video is up a while, maybe this is there already if enough people want it. And let me know if you like this video as well, if you like the style of the video and if you learned something from it. That's really what I hope that you take home today. And most of all, I hope you enjoyed this video and I hope to see you in the next one. Bye bye guys.